And volatility isn't necessarily a risk. It's only a risk if you have a short time horizon, which means that you're only going to be holding this money for a short amount of time. So what we can kind of see here is there may be better instruments to hold money for a very short amount of time. But for any duration longer than, say, a couple of months, Bitcoin is your savings account. It's just kind of like how you have a checking account and a savings account. You could think of your checking account being the currency that people are willing to accept more broadly today, and you know that the value of that currency is being systematically eroded, the value of it. And you know the value of Bitcoin is systematically being grown because of the way it's designed. So if you have extra money in your checking account, what do you do with it? You don't go buy a new piece of furniture, a new piece of art, whatever. You take that extra money and you put it in your savings account so that you can grow your nest egg, and you could buy and do things that are really important to you, not frivolous, not going out for dinner, these kind of small things, which, you know, you can do in some sort of moderation, of course, but there's a point where your income is more than your expenses and you're able to start saving. And when you do, your step should be saving. It should not be speculating, right? You shouldn't immediately go from checking account to portfolio to investing in companies with operational risk and all these kind of things. It should be building that savings account, the nest egg of cold storage Bitcoin that is absolutely secure, that is protected by cryptography, and that you have the sole ownership to, and you've secured it in the proper way. And then beyond that, once you feel like you have enough savings, that is when you can start investing. And to me, the only thing worth investing in is a company that is going to grow the amount of Bitcoin that it has and the amount of acquisition of Bitcoin that it does into the future. Those are the two metrics, because that is money. And every other company that is not doing that, they are acquiring and building something that is not real. They're living in fiat land. They're not getting more Bitcoin. They're only going to get less because it's going to take them longer and longer to adopt the idea that Bitcoin is money. And that is what they should be acquiring and pricing and valuing everything in. So once you have your savings, that's when you start looking into investing. So build your savings is what I'm talking about here. Look at Bitcoin as savings. Understand that it is built to be savings, that is built to be a store of value, and that all the other use cases around money will develop and grow over time as those use cases become more and more important. Bitcoin can not only just be a store of value, it has to, and luckily it can, become all the other things that money is: a unit of account, a medium of exchange.